I would like to call on Mr. Sanjay Kapoor to please come on stage for a bit, sir, and felicitate our eminent panelists for today. We have Mr. Ram Rastogi. Sir, may I ask you to please come on stage? I'd like to call on Mr. Pradeep Sampath. Sir, request your presence. Mr. Zubin Thafti, request your presence also, sir. And with a big round of applause, may I call on Mr. Govindraj Ethiraj, sir. Mr. Kapoor, thank you so much. You can please take a seat. Mr. Govindraj, heard so much about you, always liked your presence here. Thank you so much, sir. You can take it from here.
Okay, so let me introduce everyone, and I'll try and follow a sequence, but I'm not sure anyway, let me start from my extreme left on the stage. Pradeep Sampath, Managing Director of N-Store Former. To his right, Zubin Tatli, Executive Director of PwC. I'm Govindraj Ethiraj. I'm a financial journalist or recovering one. And to my right, Ram Rastogi, Chairman of the FinTech Association for Consumer Empowerment. There's a biography. There's a bio as well for each of them, but I think we're running very late, so I don't want to now start holding up people. On the extreme left top is Balu, or Balakrishnan Mahadevan, consultant World Bank and former COO of NPCI. To his right, for us, that is, that's Shalini Warrior, Executive Director at Federal Bank. And below that is that Mahesh? Yeah. Mahesh, okay. So we're still missing Mr. Padmanabhan? Yeah, I saw Pramod as well. Where did Pramod go? Okay, whenever we find him, we'll get him back to you. Okay. Okay, great. So the discussion topic is digital payments. Is India ready for the next big leap? Now, the theme presupposes a few things, which is important. One is that we've obviously progressed a lot in digital payments. You can see that from the statements that are constantly emanating either from the government or the Ministry of Finance and maybe the payments industry itself. So that's good news. The second is, but even as we've achieved what we've achieved, there are many steps to take. There are issues to do with growth, issues to do with how do you compensate the people playing, how do you compensate for innovation, and how do you really bring about the change that you want to bring, given the architecture that we've already built and want to maybe evolve to. So that's really the background to this. So what I'm going to do is ask each of our speakers to speak for a few minutes on the subject. So we've tried to keep it like a bit of a for and against, so that we try and get both sides of the equation. And hopefully not every, I mean, like I said, we all agree that we've reached somewhere, so there's no need to come back and, sing praises, so to speak. So, shall we start with you? Huh? Right, Mr. Padmanabhan is joined. He's on the bottom right square of the screen. Thank you very much. Yeah, it's hybrid, yes. So we are sitting in a hotel in Powai, which takes about 2 hours to drive to. If you really want to know.
Depending on traffic.
Depending on traffic. Anyway, okay, I'm going to be a little biased in the beginning to start with the people here, but so maybe I'll ask Pramod and Zubin to kick off first. Pradeep and Zubin to kick off first. So Pradeep, give us a 1 or 2 minute overview on how you see this theme of taking the next leap.
Good evening. See, right from 2007, we've been talking about digital payments, and we have gone past multiple milestones, and today we are at a stage where a significant portion of cash is being converted to digital. And yet, there is quite a few things that needs to be done as we go forward in this journey. And fundamentally, if you look at it, the payment is a means to an end, right? I mean, every payment is going to be preceded by a transaction, which we call it as commerce, right? And unless and otherwise there is going to be a synchronization between commerce and payments, there is always going to be a challenge in terms of trust. There is always going to be a challenge in terms of, dealing with the consumers. So the payment and confluence of payment and commerce is a moment that we are actually going to see from here on. And the initiatives that we are seeing from the...
You're not in from DC.
Yeah, thanks. Go ahead.
Yeah. The confluence of payments and commerce is what we are actually seeing here. Some of the initiatives that we are going to see as we go forward in the India digital stack, which is in terms of ONDC or the OCEN account aggregator, is all going to come together to create a very unified experience. And we are just seeing one part of the whole transaction, which is called UPI. And we are going to see a conglomeration of all the other initiatives that is going to culminate into a significant digital wave as we go forward in the next 5 to 10 years time frame.
Okay, go ahead, Zubin.
Yeah. So I think, yes, I think the story has been great. For the last decade, we've done phenomenal when it comes to payment. India's on the map. Google has written to the Fed. I, as a consultant, do consulting in various regions, whether it's in the African continent, in the Middle East. Everybody looks to India for payments. You know, it's really put us on the map. So I think we've done a great job. That being said, I think there's still a lot to be done. I think you mentioned a few of those frameworks, and I think they're awesome frameworks. They really do, they kind of, break up the entire value chain. They enable a lot of competition, a lot of new players to come in. But I think there are certain, fundamental things that we also need to look at. I'll just state a few and then maybe we can go ahead in the discussion. One is, I think, literacy. I think financial literacy, if you look at some of the RBI numbers also, within the country, it's barely, not even 30%, under 30% as per RBI's definition of financial literacy. And I think while we've been able to enable and create a lot of great infrastructure, I think getting people to change behavior, getting people to start using it is something where we need to focus a lot on. I think, for example, UPI, tier 1, 2, maybe 3 is fine, but when you go lower, it's not as much as present. So I think those are some of the areas that we need to work towards. Of course, each of these models we can discuss and unpack. And
sure.
I'll pass
Yeah,
it
but
on.
that's a good point. I think low financial literacy is clearly one barrier going forward. Ram, do you want to go? Pramod, I'm coming to you next.
I am going to give you a little bit shock. The way the transactions are happening, I divide in 3 buckets, 5 years each, before UPI, with UPI the 5 years, and how is going to happen in 5 years. So UPI is about 45 billion transactions in a year out of 84, 85 billion. And NPCI claims that they're going to have 1 billion transactions a day. That becomes 365 billion transactions. And they say it's going to be 75% of the entire transaction. So total transaction which is expected by 26 is going to be 450 billion transactions. Now this is my worry. What is the processing capacity of NPCI today vis-a-vis other banks? Are they doing justice with that? What are the declines? How they are going to mitigate in 2026 where there's going to be 1 billion transactions a day? Are we ready? Because it's not a payment now, it's embedded payments, gone into embedded credit, now it is embedded investment. Whatever you do, there's a credit, there's a payment leg. And UPI is going to 75%. Who is going to build the remaining 25? And we need to really discuss on this area that are we thinking on this? Is there a systemic risk on NPCI? How we are going to take care of OCEN or ONDC with the more transactions coming? So we can discuss in subsequently. That's it for me.
Okay, great. Pramod Verma, can I come to you? Pramod, and maybe you could also talk about the architecture and the architecture challenges as you see going ahead.
Thanks for having me on the panel. From an architecture perspective, I think we have been looking at very long-term vision. We are not looking at short-term play at all, frankly. It's at least a decade plus journey that we need to be ready for. There will be ups and downs, but the fundamental idea has been and will, in fact, across most of the things we are doing, Aadhaar to India Stack and the UPI to OCEN for lending to ONDC for commerce to, they're all about democratizing the access and then ensuring formalization. It's all about formalization of a large section of India that is left informal. I think I don't think we have a choice. I don't think we have a choice but to do this. And that necessitates some painful but transformational steps. And India has been very courageous. And the regulator, we have, sir here, and regulator to NPCI to even the ecosystem, banks, everyone stepping up to embrace something that has never been done in the world, an open payment network like UPI, and pushing it to 6.5 billion transactions last month is not a joke. I think it's painful, definitely painful for probably everyone involved. But the idea of an open architecture that allows interoperability and dramatic reduction in cost of doing business, cost of onboarding customer, cost of payments, cost of access, cost of trust. KYC was about cost of trust, paperless KYC. Unless we reduce that cost through fundamental architectural transformations, we will continue to have the great divide. We'll probably push 22 million cards or something like that to maybe 48 million people, 50 million people, maybe even to 70 million, 100 million people. But what happens to the remaining 930 million, adults? So I think everyone has been truly supportive and understands the long-term game. And the long-term game is fundamentally this: formalization. Formalization via open digital public infrastructure that enables many players to come together to offer diverse and affordable and accessible services and solutions to everyone. And this is the same theme repeating. UPI was just the beginning for us. We are doing that for lending. We are doing that for data. Account aggregator is a game. I don't think that people have even understood yet. None of us, all of us including, what it will mean in 2030 or 2025 and 2030. And we are doing that for health. We are doing that for commerce, ONDC. So I think we are in for very, very interesting journey ahead towards formalization, towards ensuring very large population has access to products, services, and equitable opportunities, quite like the way all of us have on top of the pyramid. And payment is underpinning. Identity payments are so underpinning. It doesn't matter what you do, whether health or commerce, payment comes in the way. So there are risks in terms of ensuring that kind of scale. And UPI is currently, I know for sure, they have benchmarked to 1 billion a day, by the way, NPCI, not 1.6 billion a month. They were technologically, but banks have to cop up, the core banking has to be upgraded, security has to be upgraded, awareness, reduction of fraud. Fraud is much lower than cards, but even then, it's a cat and mouse game. We have to continuously do that. UPI Lite that is coming up should take a lot of, by the way, weight off the core banking. Otherwise, the 10 rupee, 20 rupees, 100 rupee transactions were hitting core banking, right? Every transaction. UPI Lite is a very wonderful wonderful idea that just launched last week, I think, in GFF, which takes a lot of that off the core banking system, allows even further scale towards 1 billion a day and even beyond. So, but yeah, payments have their own risk, but we have no choice. We are at a journey that we all have to journey that together painfully. Thank you.
Thanks, Pramod. I'm going to come to the rest. Pramod is, since I didn't introduce him, he's the CTO of Wake Step Foundation. He's also the chief architect of Aadhaar and various India stack layers such as eSign, Digital Locker, Unified Payment, and not to forget CoWIN, where he played a critical, which is his health reference that he was making. Okay, let me come to Shalini. Shalini, would you like to go next from Federal Bank?
Yeah, thank you very much and good evening. Happy to be on this panel with a group of fellow panelists, all of whom are quite illustrious in this field. But the topic really is about digital payments. Is India prepared for the next big leap? And Pramod aptly covered the fact of the architecture and the infra that needs to be there in order to make sure we can scale up. So he's covered that. I'll probably take a different angle to this, and this is more about the whole issue of digital awareness. Because I think we can put all the architecture in place, we can put all the infrastructure in place, but if people don't know what to do and how to do it, we will never be able to convert them into digital users. And there are two angles to it. One is the usage of the capability, and the other is also to understand what are the pitfalls of digital and how to make sure they avoid the pitfalls of the digital. The second, both of these aspects are important. And the second becomes increasingly important because the general reaction is if you once had a fraud on digital, at least I see it with my customers, if they've had a fraud on digital, the ability to get them to get back into digital is much more difficult. They take that much longer to be able to come back onto the digital platform. They tend to say it's kind of risky. Let me just go to the branch and do the transaction, etc. So the whole aspect of digital awareness is something that is catching on quite strongly. And no single individual can make a difference in this area. The Reserve Bank of India has done a lot of work. I'm sure all of us are familiar with some of the campaigns they're running, including using brand ambassadors like Amitabh Bachchan, etc. So there is one set of work done by RBI. There's another set of work which entities like Google are doing. I think all of us are again familiar with the fact that Google's running a whole lot of campaigns about staying two steps ahead and making sure you don't fall prey to frauds. Regulated entities like ours, like Federal Bank, etc., have another big role to play with our customers. With how do we make sure that they understand what the capabilities are, what precautions to take, what are the kind of steps we need to take from a cybersecurity perspective so that they're not fall into traps. So there's a lot of stuff that banks like us are doing. For example, Federal Bank was recently running something with the common man in the Times of India, which was using our iconic common man of Rashman and some cartoons, which we've completed our series. Now Google is running that series. We're also running something called Twice as Wise, which is a campaign to educate people. So the broad point I'm making is awareness is absolutely critical to get more and more onto this journey of digital. And unless we get those awareness levels up and assure people that frauds can be prevented to a very large extent, until we do that, I think we will not get that next leap. So the architecture and the infra that Pramod spoke about can only be utilized if we have more and more people joining that journey on digital, and for which awareness plays a key role. So that's really what I would say, Govind, that awareness is one of the pillars for this whole digital leap.
Got it. Okay. Thank you for that. Mr. Padmanabhan, the former executive director of the Reserve Bank of India, had stated in our conversation earlier that he wants to go last because he would want to be like a Lala Amarnath, the commentator who comes in after everyone else has finished batting. So, I'll defer to that. And let me go to Mahesh next. Mahesh, a couple of words on how you're seeing it from your perspective as CIO of Yes Bank.
So I think the way I look at it is, obviously, the digital transactions are definitely increasing by the day. But as Shalini rightly put and Pramod said, an infrastructure on one hand and the adoption of it, how we expand it to the market, there are multiple ways of one can skin this across, right? And from a bank perspective, as she has mentioned, the fraud side of the story, I think one area that I will cover is how do you make it more inclusive? And to make it inclusive, one of the big asks that we do is, we sort of create a open gateway kind of a user Rails platform, and that's where we've been fairly successful. Obviously, those comes with their own set of risks. So essentially, I'm saying, we have a lot of players today, who play in very specific segments, like for example, the fintechs or NB and smaller players who essentially try to expand in bands. Enabling them to expand the coverage in terms of payments using the kind of central infrastructure created, I think is an area that will only expand itself with UPI Lite. And to me, I think I would be very, I would say two parts to the whole story. First part is to say that we have to expand the reach through multiple partner engagements. That is going to be the success for at the end of it. And hence, as you expand your reach, then you're going to serve better and you're going to be able to create more inclusivity. The second part of the story is as we move into such large digital transactions, I will come back to what happens to a banking ecosystem. Pramod did touch upon these micro transactions tend to clog your central core network, a core banking ecosystem itself. So there is a lot of us run legacy tech in a way that it starts to create overheads onto the platforms itself. So there is, I would say, as banks, one of the key things, while we acknowledge the speed of action that we are really taking to re-architect some of these transactions and the way some of the core systems of record essentially are going to play is very, very critical to foresee from an expansion perspective. It's only going to explode. But as you explode, every bank or a financial institution needs to really sit back and see what does it mean from acceptance perspective as an acceptor and as a issuer, and what it means not just from a risk perspective, from internal architecture itself, because we have enough and more compliance, storage overheads, PCI overheads, name it. It is only going to increase for regulated entities like us. And now the kind of overheads it creates on our ecosystem with negligible, I would, sorry for using the word, we don't get much income from this, right? At the end of the day, there is still a big issue around that. So no, we only try to rush a cross-sell, upsell from it, which is far-fetched. So at the end of it, I think banks have to look at it from twofold. There has to be inclusivity in terms of expansion through fintech players and everything, and also look at what cross-sell we need to do while they also unpeel their own legacy infrastructure in terms of saying how do you really accept these transactions to be able to look for scale. So there is going to be that option, and UPI is here to stay. Digital payments are only going to expand at best on a double-digit growth year, month on month. It's not going to go down.
So on that note, the elephants in the room have now come out. So that's a good always start point for any discussion. So on that note as well, Mr. Padmanabhan, it's over to you. I think you have a couple of points I know you had mentioned earlier, so I'll really hand it over to you now to take over.
Okay, thank you very much. Happy to be here. I think when we are talking about are we prepared for the next wave of digitization, I think all my co-panelists have talked about all the aspects. They have talked about the infrastructure. I think before we could hear what was happening there, somebody did mention in the closing remark about how we need to take care of the concentration risk by having more institutions. I think Shalini pointed out about the education important for fraud prevention. Inclusiveness was again flagged. I agree with all this. Now the question is, where does the regulator come in? Because I think in India, it has to be remembered that the regulator has a very important role to play. And in fact, he initiates the entire process in a way by setting a vision for the next 3 or 5 years and says that these are the areas that we are looking at. That is one. The second issue which often gets debated is what should be the role of regulation as far as the innovation is concerned. Now, the debate often goes whether the regulation will have to be activity-based, whether it has to be principle-based, whether it has to be entity-based. I think this debate is not something which is peculiar to India. I think world over, the regulators are struggling that given the world of fintechs and the banks, somebody did mention about the UPI and the possibility of that growing 2 digits probably every month. I would be happy every day. It doesn't matter. But I think where the problem is going to come in is the core banking as it exists today of the banking system is not going to be able to support this kind of growth. So we need to re-architect the core banking, first of all, to make sure that the UPI success story continues as it has so far. But I think from a regulatory perspective, it is very important to ensure that in terms of this innovation continuing, because the innovation has to continue when we are talking about the next level. Today, I think we have made our retail payment system at least the golden standard as far as the rest of the world is to follow. I think it took a lot of efforts. And if that has to continue, the regulators will have to make sure that the regulations are designed in such a way that it doesn't get too granular. You don't try to micromanage the products, and you are able to set the rules of the game upfront. I mean, one of the issues, burning issues in the market is why the regulator often talks about an affordable payment system. Does an affordable payment system say that the payments must be available free of cost to everyone? That question arises. I think the counterpoint which often comes in there is that there are some systems which are for social good, and social good must be there. I completely recognize that. But I believe that if the investment needs to keep happen and the innovation needs to happen, what you want to be recognized as a social good must be recognized upfront. Now, it cannot be that some investments come in and 5 years or 6 years down the line, the entire income stream get cannibalized because you declare something as a social good. So I think there is a lot of work that the regulators will have to interact with the market and decide. I would think that in a country like ours, the scaling up has happened very quickly. Wherever the regulations have been clear, it is light touch. And once a particular, say, an innovation becomes a product, and sometimes it takes very long to become a product, I think then we can talk about more granular regulation from a customer protection point of view, etc., etc. But basically, I would think that the conceptual clarity about the principle-based regulations, number one, and secondly, the rules of the game being made upfront so that the investment comes in an unhindered manner. And let me tell you that regulation always is taking decision when you do not know whether it's fully black or fully white. But this is made more complicated by the technology, where I think the scaling up happens very quickly. So it is important for the another characteristic that the regulators will have to imbibe in my future is to make sure that they are agile enough to quickly decide one way or the other, and not allow a particular activity to scale up to such a level that any future regulation one way or the other becomes disruptive. Maybe I stop here and then we can discuss further.
Okay, thank you for that. Balu, you're next. I know you're looking at 2 or 3 angles. I think one is when we were talking earlier, you were talking about the data gaps, as in could we have more insights into what UPI is and how it functions and its spread. And the second, of course, is the more contentious one, which I'm sure others will talk about as well, which is who really makes best use of it. I mean, this was supposed to be a India product. Is it still that? And should it be? And what's the best way of ensuring that it's the most effective and efficient platform for everyone to use at obviously an affordable cost? So go ahead, Balu.
Very much. Good evening to my fellow panelists and all the participants. It's always a privilege to be on a panel like this, Norman sir. It's always a learning for us. So I just wanted to say 3 things before get into the actual topic of discussion. Right. While we have grown tremendously in terms of retail digital payments, when I joined NPCI in 2009-10, we did not even have 1 billion retail digital payments, and we are talking about 80-90 billion retail digital payments today, and that growth has been phenomenal, right? But that has happened on a low number, therefore growth has been phenomenal. And going forward from 80 billion to 150 billion, 300 billion is going to be challenging. We need to be aware of that. Right. If you look at from the per capita digital transaction happening across CPIMA countries, some of the select countries I looked at it, right? India is the lowest among those BRICS nations, even among the BRICS nations, at about 29 transactions per customer in the year 2020. In comparison, South Africa had 98 transactions per customer in 2020. Even assuming UPI will grow 3 times, we will probably beat South Africa in terms of per capita digital transactions. So therefore, while we are growing very well, I think subsequent growth needs a lot of planning and execution. I think Pramod and Padmanabhan sir and Shalini, all of them highlighted the need for the ecosystem being capable of handling these billions of transactions is going to come. I think we need to be conscious about that. Coming back to the questions you asked, I do think there are a lot of statistical information which probably could help us to identify and understand where things are happening and where things are not happening. To give an example, a lot of account-to-account transactions happen within State Bank of India. We don't call it a digital transaction. They're actually digital transactions. Probably we should look at them and figure that out. The second aspect of coming to UPI, I'm told that UPI has been used innovatively by many players. For example, there are a lot of penny drop transaction happens to validate the account number of the consumers. Right? We don't know how many transactions are happening in that manner. Maybe those can actually go from UPI transaction to something like zero transaction, which happens in the US to validate the account number. Probably that will reduce the load on the ecosystem as well. I am told at some point that more than 50% of the UPI transactions are value less than 200, and therefore UPI Lite and those kinds of stuff would definitely help. Right. In terms of data availability, I think since UPI, NEFT, IMPS, all of them works on bank accounts, right? And in India, there is this concept of classifying the bank account, into current account, savings account. So therefore, if RBI and NPCI can take some steps to give us more details in terms of where these transactions are happening, how many transactions are current account to current account, how many from current account to savings account, how many from savings account to savings account, how many from savings account to current account. These kind of breakups will help us to know where things are growing, which system is used for what purpose. I think that's a major gap, which is not allowing us to get into more details about the payment systems in India. And the other gap, which I found is, we don't have statistics in terms of which districts are doing well, which districts are not doing too well. I think even that would help us, for entrepreneurs and startups to focus on those places where the growth has been lower. They can focus on that instead of crowding a Mumbai and a Bangalore all the time. I mean, those are some of the things I wanted to highlight, but I'm happy to take any questions on that. Thank you.
Okay, thank you. Thank you very much for Balu. I think we've identified, just to come back to the theme, the primary theme was digital payments. Is India ready for the next big leap? Now, I think what we've seen now is clearly one of the 4 or 5 issues which we need to be concerned about or be talking about to ensure that we actually achieve some of those targets or aspirations that we have. So let me begin with the technical side first, right? So Ram, why don't you go off? I think, so one of the points that's being made is that, is our technical infrastructure ready? And I'm going to come to Pramod as well on this. Pramod seems optimistic that, the technical infrastructure will scale up like it has in every other area because that's how things grow. What are your concerns?
So I would like to stress on 2 points. One is that you're talking about 365 billion transactions. So as per the norms, your processing capacity at NPCI level should be double and 50% annual you have to update. The second thing is that interoperability of clearing and settlement system. If some system is doing 400, 500 billion transactions, if this fails for even 1 hour, what is your backup plan? And it has happened because see, the technical declines on UPI is about 2%. Worldwide, the benchmark is less than 1%. If 1% looks good when your base is low, we're talking about a billion, then 1% itself goes very well. And the biggest worry is duopoly. 80% of the UPI transaction is coming from the 2 companies. And one company is TPAP. Even it's not regulated. Nobody regulates that. In fact, Supreme Court asked that who is regulated and nobody has given any answer. That TPAP has got 5 banks. That means these 5 banks have got a market share of about 75%. That means the data of 75% people are available there. Are they really saving the data? Are they really sharing with others? Nobody knows. And the last thing is that from the regulator side, the supervision of 450 billion transactions, whether it's an offsite or onsite, still a lot of things are wanting. If you see the BIS Switzerland has said that every central bank should hive out of the supervision, they should remain only a regulator. So there is a model where supervision has been given to SROs. So SROs has to be created because somebody has to be, otherwise the errand boys, this penny drop transaction, will be able to believe 10% transaction is 1 rupee transaction and banks are not getting anything. They're paying for switching, they're paying for the TPAP, 30 paisa, and they're paying to the beneficiary. From where the money is coming, how long we can. These are the areas somebody has to give a thought, That is from my side.
Okay, I think 2 good points. Let me pick both of them. Pramod, do you want to come back on the infrastructure part first? I mean, what's your sense? Do these things scale up as we grow, or will we have to work doubly hard to ensure that we keep pace?
We have to work not doubly hard, even like triply hard, whatever word you want to use. It's not going to come free for us. This journey is not going to be free for anyone. I think it's going to be quite painful, but fundamental architecture itself of UPI, which I'm very familiar with, the way UPI is designed, the way that the simplicity of that protocol, the same reason Aadhaar scaled, the pure sheer simplicity of that system allows the really no limit at all for UPI to grow. But we need to continuously make sure the UPI Lite is one of those examples where really small transactions completely go off core banking system and sort of get accumulated into single bulk updates into core banking. Is a brilliant innovation that's coming down, and while RBI is starting with 200 rupee limit, cautiously so, I'm pretty sure it'll increase to 500 or 1,000 rupees or whatever. I mean, given the time. That's one. Second, the penny drop transaction, PCI, as I know, has already launched the account you don't have any but banks will take a little bit of time to offer, like NPCI doesn't offer the API directly to the market, right? They offer via the bank and the wallets and the regulated entities around them. It might take a little bit of time as you grow. All this penny transaction will go to account validation, which has zero rights into banking. So that's going to go away. The third, I know from that Aadhaar example, we know trillions of computes that we originally expected the data center to be 20,000 square feet. Then 2-3 years down the road into 2013, 14, we were thinking what 10,000 square feet. You know what the size of the data center? Okay, I'm not sure whether you are able to hear me.
We are able to hear you.
No, I think there are three aspects of it, right? So innovation, like UPI Lite, absolutely ensuring the bank system, like systems through alternate validation, verification APIs, which is already live. And the fourth is the new architecture, the compute, storage, and the size is dramatically changing. I think it's an investment we all have to make. And this takes us to the pricing and sustainability of UPI. And I think all of us have been, frankly, all of us have never been arguing for free. I mean, at least early creators and part of the journey. We have been saying that there must be a way for large merchants to pay for a reasonable, a utility fee. They pay utility fee for sustenance, while roadside vegetable vendor, she doesn't have to pay. Selling large transaction coming from large merchants, they should be able to pay. I think it's okay for them to pay a utility fee. So I think we should be able to do 3 or 4 strategies to deal with this scale and sustenance.
Okay, Ms. Padmanabhan, can I come back to you on the one point that Ram made, on who should the supervision be spun off? As it's been argued in many other cases in financial services, should supervision be spun off from regulation? And if so, will that be one point? I mean, one sort of hastening factor in the case of digital payments?
See, my personal view is that a particular structure does not make it efficient in any way. I think the supervision being taken off the central bank or taken off the regulation has been tried in many other countries, not with relation to the payment system. The general supervision of the banks itself, and I don't think it has been a great success anywhere. I don't think so. Basically, I don't support the view that just because the supervision is spun off, it is going to get any efficient. But what should happen there is probably we need to think about more of what we call the SupTech. The technology must take over and make sure that the quality of supervision improves. And it is not going to be achieved by just spinning off. That's personal view. But I would also like to make the comment that as we think about, let's say 650 billion is, I think, the number that Ram talked about. Are we talking about one institution? Because I think while this we have a larger debate about constant risk that is coming on NPCA, most certainly. And that then begs the question that somewhere we thought about the so-called new umbrella entities, and this is today, I don't know where it has gone. It's just gone off. And some applications are pending with the and nothing has happened. Now, there again, we need to have a debate. It should be multiple institutions, probably different technology, because all my tech experts here would say backup. The ideal backup is which uses different types of technology, and then not the same technology getting replicated, and whatever be the number of layers, one
Sort of late into the evening, and as more people start watching Netflix in Powai, we are going to have a problem with bandwidth. So we have to accept it. Anyway, okay, so let me come back to our my three physical compatriots right here on stage. So we're talking about 2 or 3 things, Zubin. So I think, and then I'll come to you, Pradeep. So one is that there is a, let's say, an awareness gap. There is also a fear gap, as Shalini said, how do you bring back people who've had a bad experience? So I was reading in the Mint newspaper day before yesterday that almost 50% of all online financial frauds are linked to UPI, right? And I mentioned that the other day and all of you jumped at me, and I went back and checked that number again. It may be wrong, but my sense is there is some truth in that, or a fair amount of truth in it. So what's the problem that we should be addressing first in this hierarchy of topics? And why don't you go first, and then let me get some more views.
Yeah. So I think on the fraud, I don't know the exact numbers, but yes, of course, the volumes of UPI are far, far higher. So maybe as an absolute number, it could be higher, but as a percentage of the overall, it would be a lot lower than any other rail. And usually these frauds are because of people don't know. People are being duped. There's an literacy and awareness issue. It all boils down to that. It's not that the system was compromised. It was not that something was wrong with the system. It was that, somebody said, I'm going to give you money, but sent a request to collect money, and he said yes, and money went out of his account, right? Or someone used a different scan QR code and the wrong money went to the wrong, all of those kind of things, which is all boils down to literacy. I mean, I know my mom had a scene where someone called up ATM, KYC karna ye wo, took access of the phone and took the OTP and did all of that. So it's all boils down to literacy and awareness. And that's where I think while we've grown in terms of volume, the main use case for any faster payment rail for a country is cash displacement, meaning removing cash from the system, removing the ability of people to use cash. Today our cash to GDP, if you see the numbers in the history, it's still pretty much, in fact, has gone higher up in the last few years. So that use case, while it has tried to do it, it's still not fully successful, and it's because it's tier 3, 4, 5, 6, which really are not used to this. And either you have to use an incentivization model, or you have to use a penalization model, or to push these people into a situation to have to use it, like COVID.
So, Balu talked about South Africa. He said the per capita transaction is 98 compared to 28. So that's an opportunity, but is it also a risk is my question. Do you want to weigh in as well, Pradeep?
Yeah, so I mean, I just want to add one more point, in the sense, when you look at this awareness part of it, okay, the trust is going to be one of the major reasons as to why a consumer is going to transact, right? I mean, back in 2007 when ATMs were there, people used to go to the ATM and give the card to the security guard and then say that, can you take this cash and give it to me? And I'm sure today also it is happening, right? There is a trust factor which is involved, and that trust is got to be created in the technology system, and that is going to happen only when you go hyperlocal, only when you go when you include many people into this transaction. And that's exactly where these ecosystems are actually going, okay? And it is a journey. And I don't think you can just create so many, materials and then go and teach people. I mean, one of the examples, like, when the pandemic hit, right? Nobody taught anybody about anything, right? It is just that people started using online systems. That's it. And today, you see the convenience as a factor itself is defined in a very, very different way, right? And that is how we have actually grown. I mean, I can give you many more examples. I mean, when most of you actually today sitting in this room would know about the ATM transactions being made free back in 2007 when Sir Sambamurthy sir was there. So we were all there doing. So the whole banking system actually went for a toss, right? But then we came back, and then there was an issue. There was a mistake, but then the whole system adapted to it, and then it came back, and it came back much more stronger, right? So this could not be seen as probably an issue. We will learn from this, and we will grow, and that's exactly where we have proven multiple times. I mean, it's not once, it's not twice. So whether it is fraud, whether it is trust, it can, I mean, awareness, it can only be mitigated by bringing trust into the factor, and which means that you need to include many more people who are currently excluded, small businesses, everywhere where there is a hyper-local model that is there. So this will automatically start picking up, is my view.
Okay, Ram, can I come back to you? So I think on two things. One is on trust. Second is the cash aspect. Right, so the market, I mean, anyone in the fintech digital payments will say that the market is always the cash market, right? It's not about whether this will go from X to Y. So what's your sense? Why is it that cash is still so big as a banker or a former banker?
See, the cash will remain like which I told you that tier 3, tier 4, tier 5 is still people believe in cash transaction. I'm telling you, the biggest problem what we are facing is a trust factor. A grievance management system in UPI needs a lot of improvement. Lot many people, they leave transactions, 100 rupee, 200 rupee transactions not happening because of the connectivity issue. I was reading the numbers which was given on the website. Some of the banks, the technical decline is as big as 9 to 10%. Are we doing VAPT before we are onboarding the banks? Are we really rectifying them? Are we providing them any kind of technical analysis? They say that the system is working on 5.9. If the system is working on 5.9, that means they can have only 14 minutes downtime entire year, where the system is down for hours together. So who is going to benchmark the best system? Let's talk about the reality in the system, that it requires a lot of changes, not only at NPCI level, but in the banks level also. Banks cannot go for a public cloud. They have to go for a private cloud. And what is the cost of private cloud? And it has to be really think on these lines. It's easier to say, but then it has to be at the end of the day, you have to create a business model.
Got it. Okay, so let me get Shalini and Mahesh on this. Shalini, if you can address 2 points. I think one is what Ram just said, but also the larger question of trust. Whose responsibility is it? I mean, in the truest sense, to build trust, to grow this market?
Before I do that, I think, Balu, I think you wanted to come in on some points, so maybe I'll go after you. Please go ahead. Yeah,
I just wanted to respond to Govindaraj's question in terms of why cash is still prevalent in the country, right? I just wanted to say this, right? When I'm in the US, 1 month I can live with credit card alone. I don't have to use my wallet at all. But I go to the best part of Mumbai, best part of Bangalore, best part of Delhi, best part of Chennai. I necessarily have to have cash. Therefore, I have a feeling that the issue is not only on tier 2, tier 3, tier 4 cities, even in big cities like Mumbai, Bangalore, and Mumbai, we don't have an infrastructure where one can walk out of a valid observe is, while cash is growing, people look at cash in 2 kinds, right? One is for store of value, one is for transactional purposes, right? If I look at the RBI's share of currency in circulation, I would consider currencies up to 500 is basically used for transactions, right? And 2000 is what actually you store of money.
Clarified all the issues pretty well. What I'll try and do is, even in the interest of time, let's try and sum up. Right? We are, just to come back to the theme, it's about what will it take for the next digital leap or the next big leap. Infrastructure is clearly one. The investment in infrastructure is one. Trust is second. The ability of systems to talk to each other is third. Knowledge and literacy is fourth. and overcoming of fear, which I'll sort of bundle with knowledge and literacy, will be one. Is there anything else I've missed broadly?
I think one point that did come up briefly that we didn't really express on is the economic model. All of this requires a lot of money.
Absolutely, yeah.
The infrastructure, the building of it, the innovation and running it. I think UPI, there's been a lot of...
And Mr. Padmanabhan has brought it up as well, and so has Ram. So I think, and how do you make this whole thing remunerative for those who are playing in this? So I think these are the 5 major questions which will determine whether we can be successful or take that big leap. And I think to the point that Balu made, can we take our per capita spend to a much higher level than what it is today. I think the infrastructure will follow, as Pramod says, because we've done it in many of these other areas. The trust will get built, though it may not be that easy, but it will eventually happen. If I've got you back, Shalini, are you there?
I think the point you've summarized all of it in the summary that you did, but I think the point you had left me with was trust. And I think there is no kind of single entity that can take the entire responsibility of building trust. Obviously, regulated entities like ours, Federal, yes, etc., have a large part of that responsibility to build the necessary guardrails that enable customers to transact in a manner which makes sure the trust that they've reposed in the banking system is held up. Having said that, I think everybody's got to come together and everybody is doing their role. So whether it's the regulators like RBI, the Ministry of Finance, the NPCI, all of them are. So I think the element of trust is clearly very, very fundamental to the digital leap, and all of us will have to play that role. Today, the kind of frauds we see, I know you quoted some statistics, Govind, but I think the kind of frauds we see are, to be fair, reasonably basic in nature. They're not like somebody's kind of, the technology architecture has got hacked in some convoluted fashion. They're fairly basic, OTP has been revealed, or I think Mahesh was making a reference, a collect request has been posed as a pay request, and many things of this nature. So I think the awareness please will come in. I do want to just add one last point, Govind, if I may, and I think that's on the whole economics of this. How do you make payments as a business? Is it going to become economical? Is it going to become remunerative for banks or for the players in the industry? Is a big debate that is there. Mr. Padmanabhan referred to the fact that if this is a social good, we better declare it as a social good and then do the necessary kind of investments around it. But you can't expect scale up, you can't expect innovation, you can't expect architecture to be built and infra to be built unless all the players in the business are here to kind of at least be able to invest further into it by making money out of it. So I think that angle has to be center table in our conversations.
Yeah, also one other thing, if I may add, what Shalini has said, Govind, is as the scales up, the risk part of it within the issuer ecosystems or the acquiring ecosystems, there is a lot of challenge that we are currently facing in terms of how we can do an inline risk management to some of these. That is very important, as what's going to happen is as the UPI and digital transactions are going to scale, how well is there going to be a central body to help orchestrate some of these so that it makes it more meaningful rather than it happening across the ecosystem. So I think that's something which we need to think as we scale out our capabilities.
See, Govind, the point that I just wanted to again reiterate that even when we are talking about a social good, please understand that the entities which are logged on to that, the point that Mahesh just made, they will have to spend enormous amount of money in ensuring security and all this kind of thing. So I think we need to rethink the way in which, because the cash is free, although the system has a cost which is never recognized at the micro level, we think that anything which is to take the cash out of the system also has to be given free. Some or other, I myself, I don't subscribe to that. So we need to think about it. While you actually concluded and said that these are the important points, you missed out the role of regulation. So I hope the indirect wishes the regulators don't exist, but the regulators do exist. So they will have to be making sure that their policies are designed in such a way that long-term investment is possible and that gets continued and doesn't get cannibalized because of periodical interventions and disruptions. And on the issue of cash, my final point, I think the system will have to decide what you want to do with that. You cannot blow hot and cold. Suddenly you think that cash is important. If a bank tries to limit the cash which is being brought into the branches, there is a regulatory intervention. ATM, there is a regulatory intervention. So I think we need as a system to think, where do you want to place the cash? I mean, it's one thing to say that any system that works in this country is efficient, but we need to work towards a long-term goal and nudge the community towards that, where I think the system will have to work together and so also the rest.
Okay, thank you very much. I just have time for just one question, which I'm going to pose to all of you for like a 30-second answer. Pramod, do you want to go first? If you had a one wish or a one ask to ensure that India makes that next big leap, what would that be?
Oh my God. Okay, you asked me the first. Now I have to think about it on the fly. One big ask.
Should be small too.
I think we talked about most of them today. I think there is really if there's a magic wand to solve everything, we would have already solved. There is no such magic wand. I think we must recognize. We talked about cash. I am not a fan of cashless, completely 100% cashless society. Frankly speaking, cash is an instrument that gives resilience. And CBDC might come, UPI will be there, cards will exist. It allows choice and it allows resilience in the country. What I think regulator is fundamentally making sure is that we don't have one system that is hostage the country with no sovereign control and the kill switch can be pulled out. I think we have been playing this really well. So I think we just have to focus on continuing to invest in automation, technology, significant awareness, no question about it, significant awareness, and continues to retain choice for people like cards and CBDC and cash and everything else. I think it's going to be a long-term play in that sense, and it's not all about UPI. So.
Okay, last words on my panel here. You want to go first?
Yeah. I think minimum
and one big ask.
Yeah, that one big ask is that, there is all of these economic models that we talked about, and we need to make sure that there is some minimum viable pricing for every business model that we're talking about. Otherwise, what will happen is that in India, we have seen everything is given free of charge, and then people have invested a lot of money, and there is no way to recover any of the investments that is made. And it is just creating a bottomless pit, right? I mean, so whatever technology that you take, which has happened in the last 10 years, we've seen this, and I think there is a time that we need to say that you need to have a basic minimum price at which you need to have a business model viable, so that ecosystem participants can come, invest, and also look for some level of returns from that business, and then it will all take care of itself systemically. Thank you.
Zubin?
I kind of will go with the same one, but I'll add a little more context to it. So, public good, private infrastructure, that debate can be there. At the end, someone needs to fund it, and there has to be a model in place. Even if it's a public good, it's the funding that comes from the public, the larger public, through taxation, government, or whatever. So I think getting that model right, and I understand that once it's given for free, it's tough to start pricing it. I think there is a struggle of will it hamper adoption? It's been growing great. We're growing billion, 6 billion, might be 8 billion tomorrow. And we want to hit, 30 billion a month and 365 a year. So I think finding that right balance, and I think there were some suggestions, is the larger players could contribute. The players that are in the big cities with larger turnovers could contribute to that. Some places on the lower side, of course, the cost of transaction, irrespective of where it exists, maybe those can be subsidized, and that could be more from the public. So I think find the right model and ensure that all the participants, the banks, various people can spend the money they need to spend for the education, for the infrastructure, for managing frauds or doing monitoring or whatever it is, right? Because if you remove the funding into the ecosystem, then the innovation and the ability to manage it and drive it and do adoption kind of fades away.
Right, and thank you for that. Ram, last word to you.
Yeah. So my last wish is that every regulators should regulate fintech and neobanks and make them at par, a level playing field. And they are going to drive down the entire thing, provided they should be given APIs from the banks, and the user experience should be provided by these people. That's the way we are going to address this 500, 600 billion numbers and what we're talking about.
Got it. Okay, Balu, I think I missed you. Do you have a last word or an ask? Very quickly.
One, obviously, the economics of the payment has to happen. Second, I think every country has done well on digital payment. They focus on all instruments. I only hear about UPI all the time. I think there has to be a focus on other instruments as well. Just because UPI is available, it doesn't mean that everything has to go through UPI. ACH could also do the function at a much cheaper price, if that is what the customers want. I think that need to be focused. And I think the concentration risk of NPCI has to be addressed. Right, today, there are 4 credit information bureaus for far lesser number of consumers. Right, there are 8 people who have been licensed to do account aggregation. Why is that for payment? There is only 1. I think it's important to have multiple players so that innovations will happen, competition will happen, better things will happen. Allowing everything to go through one entity is something we should relook at it. When we started, it was perfectly fine. But I think now that NPC has the critical scale, I think there are opportunities for others also come in and play a big role in moving to that 1 billion aspirational number per day.
Govind, can I make a one-liner as a last word?
Go ahead, sir.
Last word, of course.
Yeah, I think to me, for the next big leap, what needs to be done in a lighter vein is the system should know that who is the regulator for the payment systems.
The big ones are not regulated in any case, sir.
Okay, one very tangential ask. If you look at a 10-year horizon, I think there is, Govind, with your permission, I just want to place on record if someone in the ecosystem and Pramod and team who are there working closely, I think there is a huge amount of talent shortage pool, qualified talent shortage that all of us face as we look up to scale up our next gen infrastructure, both on the soft side and the hardware side and on the integration side. The one thing, if we have to support as an organizations like us, I think it needs to, one ask from my side would be a talent pool that is essentially being nurtured through a kind of a very good program. I think that's going to help us well.
Thank you very much. Thank you to EPS for inviting me, and I wish you all the best on your 11th anniversary.